What is pullback trading? A pullback is a temporary price move against the main trend. In an uptrend, a pullback is a short-term dip. In a downtrend, it's a short-term rise. Essentially, pullback trading is about buying dips in an uptrend or selling rallies in a downtrend at key levels. Why do pullbacks happen? Markets don't move in a straight line. They fluctuate due to profit-taking, news events, or temporary shifts in supply and demand. Institutional traders often use pullbacks to enter large positions at better prices. Example, price breaks out above resistance, pulls back to test that level, moves higher. Market trends higher, price retraces to a trend line, bounces back up. Downtrend forms, price retraces to a previous support turned resistance level, drops further. By understanding why pullbacks occur, traders can enter at strategic points instead of chasing the price. How to trade pullbacks effectively. 1. Identify the trend. Only trade pullbacks in trending markets. Avoid trading pullbacks in ranging or choppy markets. 2. Find an area of value. Look for pullbacks at key levels where price is likely to bounce. Support and resistance. Key horizontal levels where price reacted before. Trend lines. Diagonal levels that connect multiple swing highs-lows. Moving averages, 20, 50, or 100 EMA. Dynamic support resistance levels. 3. Wait for an entry trigger. Instead of blindly entering, wait for confirmation to reduce false signals. Bullish, bearish, engulfing candles. Strong reversal patterns. Hammer or pin bar formations shows rejection of lower, higher prices. Reversal candlestick patterns. Double bottoms, tops. Morning, evening stars. 4. Set stop loss. Place stop loss below the pullback low in an uptrend or above the high in a downtrend. Use price structure for a buffer to avoid stop hunts. 5. Take profits. Exit near previous swing highs, lows. Don't wait for the exact level. Markets often reverse slightly before key zones. Consider partial profit taking to secure gains while letting a portion run. Different ways to trade pullbacks, price action only. Breakout pullbacks happen after price moves beyond a range or pattern. Aggressive traders enter as price retests the breakout level. Conservative traders wait for a strong rejection or confirmation before entering. Swing point retracements. Price moves in waves, forming highs and lows in a trend. Traders enter when price pulls back to a previous turning point before continuing in the same direction. Trendline pullbacks. Trend lines drawn through key swing points help identify dynamic support and resistance. Price often pulls back to retest the trend line before resuming its movement. Stronger setups occur when price rejects the trend line with momentum. Psychological price levels. Price tends to react at commonly watched levels that traders respect. These areas act as natural support and resistance zones where pullbacks often occur. Supply and demand zones. Areas where price previously made strong moves indicating high buying or selling interest. A pullback into these zones followed by a rejection signals a continuation of the trend. Pros and cons of pullback trading. Pros. Buying low, selling high. In an uptrend, you buy at lower prices and sell higher. In a downtrend, you sell high and buy back lower. Easier psychology. Trading from an area of value aligns with basic investment principles. Better risk-to-reward ratio. You enter at lower prices with well-defined stop losses, reducing downside risk. Can be applied to any market. Pullback strategies work in stocks, Forex, crypto, and commodities. Cons. Missed trades. Sometimes the price doesn't pull back enough and you miss the move. Requires patience. If you're impatient, waiting for pullbacks may not suit your style. False signals. Not all pullbacks lead to trend continuation. Some turn into reversals. Practical tips to improve your success rate. Trade with the trend. Avoid counter-trend pullbacks unless you're highly experienced. Use confluence. The more technical factors align, the stronger the trade setup. Be patient. Not every pullback is worth trading. Wait for the best setups. Control risk. Always use stop losses and manage position sizing. Backtest your strategy. Test different pullback strategies on historical data before trading live. Maximizing pullback trading success. Pullback trading offers great risk-to-reward opportunities if executed correctly. To succeed, be patient and wait for the right setup. Trade with the trend and focus on key levels. Use stop losses and take profits wisely. Combine pullback strategies with other trading tools for better accuracy. Mastering pullbacks can significantly improve your trading strategy, so keep practicing and refining your approach.